we are going to cover in this market update just a few bits and pieces. Now, I'm going to share my screen and let me know what kind of screen you want to see. I've got a few different options here. Let's do this one here. This one need. Okay, so just tell me if this is okay, and if it's not, then I can just change the background a little bit. So this is currently the black screen, but you could have, if you'd prefer, we could have this screen, or I can have a blank Wave Rider template. So EYA. What does EYA mean? Oh, easy, easy. So what? Which one, Gary? This one or this one, or does it not really make any difference? So you got white or black. I'll go with this one until you let me know otherwise. Unless you let me know otherwise. Okay, so this we'll start with this one. So let's talk about the market and what's going on and what can sort of change things around a bit. Now, I think the most interesting probably of the currencies right now is probably the pound. And of course, we need to sort of like stick well in line with the dollar as well. But we'll have a look at the pound because I think the pound is pretty bearish right now, and let's see what that means, and let's see what we could trade kind of around that. So if we look at this week coming up of the data, you know what we've got from the different regions. And what might move the currencies. Now, the pound or the UK is kind of finding just some economic contraction. And actually, we're seeing some economic contraction across the board. The US has posted some odd numbers in as much that they're not really kind of in agreement. You know, one number comes out, and then another number comes out, and it's not really agreeing with the previous number. So we're going to need to look at that and see what that's kind of suggesting. So if we're thinking about strength or weakness in a currency, we really want to be focusing, particularly at this stage in the cycle, on which central bank is likely to move on interest rates and which way they're going to move. Last week, the BOJ held interest rates, which kind of keeps the Japanese yen in a range in a way. But if another central bank comes out and lowers interest rates, that would actually sort of like make Japanese yen trades actually a bit more positive. So we could use the yen as a possible buy on the side of our currency pair. But we'll talk about maybe why that isn't such a great idea sometimes as well. Okay, so we got an interest rate decision from the RBA. Now they are predicted to come out of 4.35%, and I would suggest that that is likely. I suggest likely that they hold their interest rates where they are. The CPI from the Eurozone as well is of interest because the ECB have lowered interest rates and they're really keen. So if we think about sentiment from each central bank, the Swiss National Bank, the Bank of Japan to a degree, and definitely the ECB are all on the dovish side. So they want to lower interest rates. They're really keen, almost before they even see the economic data, which suggests that they have got room to lower interest rates. They just want to do it. So if we think about what raises and lower, you know, what are some of the things that will raise and lower interest rates? CPI data is really important. You know, it's really the main kind of inflation reading for most of the market. The central banks tend to focus a lot more on the core number, which strips out food and energy. So we can have a look at this. So if we think about the euro, and let's see what we've got kind of year on year. Now the forecast is for 2.7. Now if we look down what's been happening since, now we are in, we're going to have the June number. So really we need to look at what's been going on since last June, because this is the year on year. So we're looking at CPI year on year. So last June we had 2 point, sorry, no, that's 2024. Okay, this is last June. So we've got the prelim and the actual. So 5.3%. Now this is very, very high. Um, and if we can kind of consider now, and then it pops up. Now we can see that these numbers up here, right the way through to, I think, probably, I'd say around about December of last year. These were all quite high. All these numbers were quite high. And if we're calculating year on year, what they're doing is taking these numbers into account because it's, the 12-month rolling average. Now, if these are high, then every month that comes in where inflation is under control or more under control, so you can look at WTI, you can look at food prices and everything else in your region. If you are effectively seeing that inflation is less of an issue. So it's still, you're still getting price inflation, but it's not quite as extreme. That's suggesting that over the course of the next 6 months, this is going to take a bit of a nosedive, and getting back down to the 2% target looks very likely. So will the next number be 2.7? Well, I think it's possible that it could be even below the 2.7. So that would put the euro under some pressure if that's the case. Now, if we have a look at the CPI data on top of that, and consider the same sort of like the same period in 2023, then you are looking at around here 7%, 6%, and then it's taken a big drop. So we're still looking at around about the same sort of period. You've effectively got 5 months of high inflation, and now sort of a much more stable picture. So when these particular calculations get smoothed out month on month on month, that's suggesting that inflation will probably be around about under control in November. That's kind of what it's suggesting here. If you see the drop down here, it's suggesting that around about November, we'll see that 2% kind of mark, around about the 2% mark in inflation. Maybe even slightly less, maybe even slightly more, but it's going to be in and around. So by November this year, central banks will have interest rates under control. Now, inflation under control. Now, if inflation is under control, that means that central banks will be lowering interest rates right across the board. And the euro would be one of the considerations to go early with a hawkish central bank. Now, our central bank rates are here. We can see they're here. Now, we're at 4.25% currently on the ECB, which is a high interest rate. S&B, so the Swiss National Bank, certainly for them, a 1.5% is quite high as well. And if we bring our attention to the BOE, 5.25%. So these are all very high. Really, all of these top three here are quite high. The RBA is high, but it's still under the Fed and the Bank of England, and you can see the RBNZ as well. A long way to drop. These particular countries have not got inflation quite as gentle as the likes of the UK and the Eurozone, and I'll show you the UK. Okay, so we're gonna get all that from Europe, and that's going to be a market mover. And my prediction would be that the CPI data will start to dip quite a lot, so that puts weakness on the euro for this week. And we'll have a look at the COT data as well, and the seasonal charts to see what they suggest. Right now, this is where we're going to get it from the UK. So only a few days later, we get core CPI and CPI from the UK, and then the day later we get an interest rate decision from the UK. Now they're going for an interest rate decision of 5.25%. Now, if we look at these inflation numbers, we'll go for core CPI year on year, because this is going to be what the central bank is going to focus on. So core CPI year on year, and you can see that, back in July 2023, it was 7.1%. Now that was the peak. Now, if you consider that this next reading, hold on a minute, 21st. Yeah, so it's going to be this next reading. This number is going to drop out of the equation as we get the new ones. Then there is the likelihood that this could drop. Sorry, this forecast could drop more than 3.6%. It may not drop down to 2% because you've still got sort of quite a few months where it was quite high, but there is a gradual decline in the inflation number, with the last one at 3.9%. So I would suggest that you know, this 3.6% is I would be surprised if it was higher than that. You know, so if anything, it's going to be below or on that number, in my opinion. Now, if we look at inflation, the CPI numbers, we are looking at June 2023, and actually the June 2023 number, 8.7%, and then they did start to drop quite significantly. And the last printing we had was 3.2, forecast at 2.1. Personally, I think that, well, even if that comes into play, if the forecast is at 2.1, that means inflation is under control, because 2% is their mandate. 2.1, so you know, 1.9, 2.1. That's effectively saying inflation is under control. If they are wrong, and the number comes in below that number there, at 2.1, or that was the May release. Sorry, they're forecasting 2%. Sorry, that was my mistake. They're forecasting 2% inflation. And I think that is extremely likely. So if they're forecasting 2% and they get 2% or below, the very next day with the central bank reporting, now whether they lower interest rates or not will be of question. However, the market will still react, in my opinion, the market will still react negatively for the pound. So as we approach this number, I think we see selling in the pound, and this is going to be released on Thursday. So that suggests that there's going to be selling on the pound for this week, because even if the number is in line with expectation, that's 2%. That's the target. And if inflation's at 2%, with the central bank at 5.25%, they've got room to lower interest rates. There is an election coming up on July the 4th. Does the central bank think that they're going to be playing politics if they lower interest rates? I personally don't think so. And one of the reasons I don't think so is that the Labour Party, the opposition party, are so far ahead in the polls. I think that they will look at it and say, there's not really anything that we're going to be doing which is going to change the election. Of course, the politicians will dive on it if they do lower interest rates, but I don't think there's going to be a lot. But that's going to be the only caveat to them lowering interest rates, in my opinion. They are ready. The inflation is under control in the UK in accordance to the CPI data. Core CPI could do with dropping a bit more, so I'd appreciate that could be the case. But the CPI data is at the right level for them to lower interest rates. PPI, so the PPI input has also started to see a steady price point here, and if not some sort of decline. So when you see these high prices back here in 2022, we've started to see this get under control. So businesses feeding into that inflation data suggests that is under control as well. Food and energy. So if you sort of like think about food and energy, then we're really talking about the WTI is one of the metrics we can use. So if we look at WTI has seen a decline, really sort of, if we think about back in June of last year, that's this sort of point here, kind of coming up to this point here. So it hasn't increased much. Okay, so food and energy, so oils are not too bad a level. Natural gas is another thing that we could look at as well, which is here. And that's kind of dropped off a cliff as well, you know, for the last few years. So energy costs are down globally, and that is also adding to the lack of inflation that's in the market. So the pound looks interesting as a potential sell. Now, you know, regardless of whether it sells after that interest rate decision on Thursday or the inflation data, it will probably sell into that number. And if you look at this on a weekly chart, this is a selling bar. It's a particular, you know, I'm looking at the pound dollar. It's a selling bar and it is on resistance. Okay, so that in itself looks like it is a positive sign for some downside. So we may well see some downside coming out of the from the pound dollar. I'm just going to have a quick look at something else here. No, it's interesting actually. Um, yeah, we'll have a look at the COT data in a moment, but yeah. So anyway, the this is a selling sell zone that we're in, and has it broken through this particular pattern? We look at these lows down here on the daily. It has broken through without much confidence. It's had a bounce off that monthly pivot, but that would suggest any sell signal, any sort of turning of the market coming in here. So let's say, for example, we see something like this. Price comes up initially. Let's say sort of, as we start the week, it comes up. But then we start to see some weakness kind of coming in maybe on Tuesday. Or maybe even on the same day. It is possible we see weakness on the same day. Let's see, we get a bar like that. Testing it is sort of, it stays under the line. Test this area here, which is also going to be this horizontal level along here, around there. So that is 1.2698. So 1.27 you're looking at. Around 1.27. This is where we want to see some information from the charts to see what the price action is. British pounds have been going down a lot this week. Is that already pricing in the expected CPI, or are you expecting more selling? I'm expecting more selling. Yeah, I am expecting more selling. I think I think you make a good point, that expectation. Really, what's happened here is, in my opinion, is that we've driven our way up to this resistance zone, and everybody's gone, but hold on, we haven't got the CPI data out yet. So they've started to sell into it to say, well, there's no reason to push it higher. So now this is expensive. They've sold it off, and they are now waiting for that data. However, if you do some calculations, the expectation for that data looks pretty negative. It looks like we're going to get to 2% and maybe even below. And I think that there are going to be more speculators coming in that would suggest, because if that number's low, if that number's under 2%, the pound's it's really likely to drop. So the pricing in aspect of it at this stage is, I think, pricing in the fact that we haven't got anything bullish to carry it higher, so people take profit. The next step is, what is the next potential driver? And is the driver going to be low and maybe even lower after the interest rate decision? Or is it stay the same or be high? Now, if we make the assumption that it's going to be low, then there's likely to be further selling. And if you look at it on the weekly, then there is room. There is a lot of room here, and we can get in sort of around about the 127 and look to get out somewhere along this trend line, maybe. So as it drops down here to around about 124 would be a high sort of area if you want a round number. 124 looks around about right. So looks like there's a possibility of around about 300 pip move to the downside. 250, 300 pip move to the downside. So plenty of room. And also, the other way that this could be played is on intraday charts. Because if we sort of think that there might well be more negativity coming into Thursday, then any buying, any strength going into this currency is likely to be swallowed up and sold off again and pushed back down. So if this gets to the weekly pivot, that would be a great place to look for some intraday shorts back down to the trend line. And then it might need to, it might be that we wait for the CPI data and the interest rate decision to take the level out. But any buying, I think, is going to be met with selling intraday. So there are intraday opportunities Monday and Tuesday, and then after that, then we'd want to be in a position to sort of take advantage of the short, which would be a longer term opportunity where you're sort of looking to sell either here or maybe even as high as the weekly pivot with a stop at the high, and then see if you can get 400 pips to the downside. You got around about 150 up. So there's around about a 2 to 3 to 1 trade to the downside if you're looking at something longer. That would be my take on it. Now, if we look at the COT data, now the COT data is, I've made my own COT charts, but you don't need to do that. You can look at this on a simple level of reading the information on offer, and always look at Friday because that's when the COT data is released. And you just look in here, CFT. Now look at this. The top one is CFTC pound speculative net. So it's talking about the non-commercials. Now what we are seeing is heavy buying from the non-commercials. Now what that suggests is that there is a possibility that everybody is on one side of the boat, and that is problematic. Now that wouldn't be a problem if this price wasn't at an extreme, but you can see the very, very top here is 70k. But when it gets into this area 59, we got here, this was the high before 59.48. So this cluster up here is high. This is high. This is high. 52.1 thousand is high. Now, what tends to happen? A drop. When you get into these sort of like extreme sort of areas, then there is a drop coming. Now, whether that's this week, we don't know. But if the pound was in between, if there was buying going on in these areas, I'd be comfortable saying, okay, let's follow the speculators. But now we're at a point where they could all be on one side of the boat, and actually it does create a potential sell signal. And if you look right the way back to, well, let's see, let's go to 2014, 10 years, 10 years of data, and we'll mark off this high here. Look at how many times it gets up here. Once, drop. Twice, drop. 3 times, drop. 4 times. It clustered for a bit, but then it dropped. 5th time, drop. So we are at an extreme. And if you think of things in cycles, it's doing this. So when it's at a peak, there's no more buy. The buy signal gets swept away. Now that doesn't mean we've got a sell signal, but what it does mean is that buying at this level is dangerous, and turns can be vicious. They can come in and be vicious. So we can look at this COT data and actually surmise that there may well be a sell-off at this stage. So this is actually quite bearish for the pound. Now let's have a look at the euro as well, because that was another an area where there is some CPI data coming out. So euro is here. Different. Look at the different picture here. This is not at an extreme. This is very different. Now, if you look at this is just the example of this. That's May 23rd. And that's July 23rd, okay? May 23rd and July 23rd. Now, if we kind of like have a look at what happened to the price action, May 23rd and July 23rd to the euro. May. Oh, here we go. May 23rd is here. Yeah, it's here. May 23rd. So there was a sell-off, but actually the sell-off came before the speculators joined in. And then July 23rd is here. Actually, the speculators this time were on top of it. But ultimately, there were 2 peaks here. So it did flow to the downside on the May 23rd. They were a little bit late on actually the speculators diving in, but they did eventually sort of like join in this area. So they got a little bit out of the end of it. Then there was a rally, but by the time it came to the July 23rd, which is here, they got on top of this and sold it off. So these peaks are really important for us to kind of look at with the COT data. And of course, it's important for us to kind of read this out and say the speculators were late turning the market, but there was a top, and then it turned, and then they jumped on. So what it's saying is that when we get to an extreme, the next move has a higher probability of actually being down. Then the speculators will come on top. So even though we're reading sort of speculating buying, it doesn't mean that means that the next move will be a buy. It suggests, at an extreme, it suggests the next move could actually be a sell. Second time round on the euro, they managed to get on top of it, but the first time round they were late. So that's what we're looking for with the pound. The euro is the same. Now the difference of the euro is that this has already seen a bit of a sell-off. And if we look at this on a weekly, this is at support now, which makes it a difficult trade, actually, because the price action is in a buy zone. The CPI data is kind of, it's a bit tricky because they've already lowered interest rates before negative CPI. So negative CPI could come out, but the market might buy this up because they're saying, well, they've already done their action. I think the pound is different because the BOE have not done the action of buying. So of lowering interest rates, sorry. So that's what I'm looking at this week, really. The pound and then it depends on what you're going to pick it against. It's good against the dollar. It's probably good against the Swissy. It's going to be really interesting against the yen, because the yen, the Bank of Japan reported last week, and they left interest rates on hold. Weekly bar, which is suggesting a top up here. A daily bar that hasn't really broken anything down. So this is we're almost sort of like a little bit ahead with this one, where we can look at this trend line here and say, if this takes out the weekly pivot, then that is a better signal for a sell-off with the pound yen. Now we'd want to wait until that does happen, until that takes the weekly pivot out. And the reason for that is that if we sell the pound and buy the yen too early, we're going to be holding overnight swaps, and it can get quite expensive. So we want to try and avoid doing that. So if the euro is weak, we can also use the yen as a potential selling opportunity, particularly with this support level. Takes out this monthly pivot and holds below it, which it was still not able to do. Even on Friday, wasn't able to do it. Takes that monthly pivot out. That is suggesting lower prices for the euro yen as well. So we can utilize the value of the yen to take our positions, and you can see the trend line bounce here. So we want to make sure that we take out this monthly pivot and the trend line. And if they will get into confluence around about the 21st. Now, finally, I'm just going to look at gold, because gold's been very, very interesting. Now, the reason that gold has become interesting is there's a few reasons. Firstly, we've got a situation where some of the gold buying that was done was due to a bit of panic in the world. We've got the Russian-Ukrainian conflict, we've got the Middle Eastern conflict, and some of those things look like they are subsiding somewhat. Some of the tensions are subsiding a little bit. So that would suggest that maybe some of the buying in gold could subside as well. The other thing is that gold is struggling with the numbers from the States, because the numbers aren't weak enough to suggest that the Fed can lower interest rates, which should be positive for gold. So I think gold is also under pressure here. We've got an M topping pattern. Now, don't get me wrong. I like gold longer term, but is this the right point to buy it? It doesn't look like it. We've got this going on, which is this M topping pattern. So that suggests that we might well be seeing one more rise with gold, maybe to this point here. Maybe it comes up here and starts to fail instead. But one more rise, which would actually create a head and shoulders pattern as well. That's what we could looking at. So we're looking to see whether this right shoulder is going to form and then see if gold is going to sell off. The environment is not absolutely on point, but it's pretty close. Coming up to the monthly pivot might be the area. The other thing about gold is that there's been a report that the Chinese central authorities have stopped purchasing gold. So we've already now currently we've got a major player coming out of the market. Now that might only last a month, but if it lasts longer than that, that is going to put some price pressures on gold as well. Now, if we look at the longer term charts on gold, there are untested levels creating this vacuum that needs to be filled and closed. It's here. And if we look on the monthly, it's even lower. It's there. So we're looking at 2,170 to 2185, I'd say, and around about 2085. So there is a possible 200 or maybe $150 drop in gold. This bar here is suggestive of selling. This bar here is suggestive of selling. I don't think it's going to be that deep, but I do think the next move for gold is much more likely to be lower than higher. So I guess to recap, I'm looking for selling the pound intraday Monday to on Tuesday. I'm looking to sell the pound a little bit more longer term as well into the central bank after the central bank interest rate decision. I think it could be a really good trade if inflation is low and the interest rate is lowered. I think that there could be a really good move. So watch out for that. You've got to manage it properly. But I'm looking for selling in the pound, and I'm looking for some easing back in gold as well. The euro is a little bit trickier, but if we are looking to sell it, I think it's better against the yen than the dollar. And that would be my thesis for the week to come. Any of you guys got any questions you'd like to ask? Appreciate who's saying. I appreciate that question. If any of you got anything else you can offer or you want to ask, then fire away. Got a few more minutes. Yeah, that's a good question as well. So the S&P 500. There's no question that the S&P 500 is a buy. Now the reason it's a buy is because the central bank may not be ready to lower interest rates yet, but they will be lowering interest rates. Now that doesn't mean it's a buy at this stage, but what it does mean is that in my opinion, we should be on the lookout for buy signals rather than selling into an area which could then turn to be a buy. I think we're waiting for this one to come down, which I think it probably will, or I hope it does. I think trading it lower is too dangerous. I think trading it short is too dangerous. Even though we're looking for it to come short, I think what would be better is to wait for it to come down and then buy it up. So where to buy? What do we need to see for this one to buy? It looks like it's finding some weakness here. The question is what's going to drive this lower, and I don't really have anything except for some profit taking. Now, if I was going to trade this on Monday, I'd probably just buy it. But I would be buying it and scaling in because I'd expect there could be another move down. But I'd be looking to sort of say, okay, now I'm going to take a longer term position on this. I'd be very surprised if it came under this level. So what I'll be doing is I'll be buying here with a stop down here, a long, long, long way down. But I'll be looking as a scaling. So I'd be buying, and it sounds counterintuitive, but the reason I'd buy at this stage is that I'd be a little bit concerned that there may not be another opportunity. So I'd be buying here with the hope that this actually breaks down. Because what I then want to do, if it did break down, I'd want to buy again along here. That would be my ideal end price. So a position on here because we are at support, and a position on down here with stops down here. So I'd want to split the the trade up, and the only reason for the initial buying is just in case it doesn't come down. But technically speaking, it should. But fundamentally, what's going to drive this lower? Well, I'll tell you one thing that could drive it lower is the season. seasonally we are in a weaker period. Selling may walk away. Summer tends to be weaker for stocks. So that's the one thing that could see some profit taken here. So you've in a way you've got one of three decisions to make. You either sell it and look for a target of around about this point here. You wait, don't do anything, and look to buy it down here, or you buy it here, expecting it to break, and buy it again and scale into the position. My personal preference would be the latter, because I just don't see any bearish signals. And even though I think the price is going to come down with a bit of profit taking, I think ultimately the S&P is going higher, and probably quite significantly higher. And I wouldn't be buying here, taking profit here. I'd be buying here and holding on to it and seeing if it breaks higher and stays, then trailing behind it. That would be my take on it. Okay, but good question, Mohammed. That would be the way I would trade the SPX. Okay, you are welcome, mate. You're welcome. Okay, well, let's wrap it up. Have a great week, guys, and I hope some of the ideas that I've brought forward are something that you can trade. If you expect the stocks to go up, then you're expecting the dollar to go down. Yeah, I am, Hussein. I am absolutely expecting the dollar to go down. But I would want the caveat that I don't know when. So I think it might be as late as November. But I wouldn't want to pick when. But I think it's coming down. Yeah. I think the dollar is going to weaken. And for that reason, gold is a buy. It's another one that's ultimately is a buy. So I think, and this is why when I look at it and I look at gold to me looks like it's a bit toppy, and we have had that sort of Chinese selling, gold. So gold could come down, but if we're sort of expecting the dollar to be a sell, ultimately it'd be great to pick gold up down here or down here with a longer term position of holding on to it, because I think that the Fed are very close to lowering interest rates. I think that the economy is weakening globally. We're seeing economic weakness. I think inflation is dropping, but it hasn't dropped sufficiently yet, and that's the interesting dichotomy. So we got this thing where inflation hasn't dropped sufficiently for them to lower interest rates yet, but the economy is weakening, which suggests that we could actually get all of a sudden just a drop in price points, and inflation could just drop off a cliff, and then they go, all right, now we're going to have to go quickly. The question really for the Fed is how fast do we want to go? I think that they've got enough to lower interest rates a little bit now. And do they want to do an easing thing, or are they waiting for data, waiting for more data to confirm what they need to do? But by that time, it could be a bit of a bloodbath, and then they're sort of like chasing their tail to try and catch up, and they lower interest rates a lot faster. So I think the dollar is going to be weaker, but I just don't know when. I suspect fall. I'm expecting sort of sometime in the autumn, but it might be earlier. But I don't like it yet. That my real thing is I don't think it's yet. I think we're at least another month, 2 months away from that particular scenario. Okay, but thanks for the question. Appreciate it. All right, guys, have a great week, and yeah, as I say, I hope some of the insights I've offered are going to be of use to you this week. All right.